Alright, so I wanted to share a macro theory I've got based on just looking at the DXY and the BTC chart. So if you look at the BTC chart here, you'll notice there's three vertical lines in each of these points over here. And if we come over to the dollar and look at, the price action that's been going on since 2016, you can see that we've had one, two, three crashes against this horizontal line. And since this has been in play for since 2016, so at the end of this year, it'd be coming up for 6 years worth of data, currently about 5.5 years worth of data. Every time we've come crashing against the top of this resistance, it always seems to be the top for the dollar, and it always seems to initiate a bull run for BTC against the US dollar. So if we look here, you can see all of these points are correlated, but we've got basically just at the 1st of January in 2017, right here, we have the crash on around about the 30th of March in 2020, right here, and quite recently in the past, the past week or so, I've only just kind of looked at the dollar in the macro term and noticed this massive pattern, so I wanted to point it out to you. We kind of came crashing into this like a week ago, and then we came crashing into it 3 or 4 days ago. So as you can see, all three of those crashes on the dollar are where we get these horizontal lines for. Now, obviously these are mainly looking at the two main bull runs and excluding the very, very flat bull run that we had down here. Obviously this wasn't flat if you got in at this price, but I don't believe the dollar came crashing against this in another time period. So this is really what we're looking at in the past 6 years worth of data, 5.5 years for the dollar. So the first time the dollar came crashing against this resistance that we made on the 1st of Jan, or towards the end of 2016, you can see if you basically bought Bitcoin when the dollar kind of came down from this resistance, you would have bought, at $1,000. The lowest it went after that was $899 before we had a rally all the way up. Let's take a price target. Let's use the price target and the dates as well. So in this instance, we had 350 days, so basically a full year, and we went up 1,649%. We obviously topped off around about here, which was the 18th of December 2017, and obviously we don't have this linked on the chart, but the 18th, or towards the end of December 2017, so 2017, you can see we were around about here, around about the bottom for the dollar. So you can kind of see these cycles move. When the dollar tops out, Bitcoin goes on a run, and when the dollar bottoms, Bitcoin dumps, and the dollar goes on a run. So if we come to the next touch point around here on the 24th of March in 2020, if we go all the way over to our next touch point here, you can see this basically called the exact bottom. This flashed when we were on this green candle round about $5,300, and the bottom was just under 4,000. So from that point there to the next peak, well, we could put the peak all the way out here. I imagine, I haven't looked yet, but I imagine one of these peaks is a year. No, they're quite a lot longer actually. So this one was a year, and this one was almost 2 years from there. So a lot of evidence towards lengthening cycles. Obviously people would normally measure lengthening cycles based on when it topped out, when it bottomed, or the halvenings. I wouldn't really take the dollar tops to the bank with your analysis for that, but it is interesting to see how far apart that next peak was. And here you can see we've had a massive crash from the all-time high, and we have put in one of these vertical lines, and this vertical line obviously correlates to us crashing on the top of where this dollar is. So once again we have these 3 touch points where the dollar topped out on the resistance, and each time so far, the 2 previous times, right here was basically the bottom for Bitcoin, and right here was basically the bottom for Bitcoin, and they went up 1,600% and 760% respectively. So that is basically all I have for this video. This won't be my main Bitcoin technical analysis video for the day. I just thought this was a fairly interesting macro theory that I have not seen anyone discuss. I mean, I don't really watch crypto YouTubers anyway, but nonetheless, I haven't seen this this pattern being shared anywhere, so I thought I'd give my 2 cents on it. So that is basically all I see for the dollar and what's going on with Bitcoin. So at least in my own kind of game plan, I would be expecting the dollar to start coming down from here. It would be slightly worrying if we did something like this. If we started hopping above this previous level here, then honestly I think that Bitcoin would be going on into a big market, into a big bear market structure. But as far as the previous history has been, I'd say as long as we don't close, I'd probably say a monthly candle. I wouldn't be too worried about daily candles, simply because this pattern has been going on for years and years and years. Even on the weekly though, well, to be fair, we did close a weekly up here. Let's see what we've done on the monthly. So yeah, we've never closed the monthly above this. This is really what I'd be looking for. Now, the DXY chart, I'm not gonna lie, it does look fairly bullish, but you know, as long as we stay below this red line here, I don't think that the dollar will be having a strong bounce, and I do think this could potentially be somewhere near the bottom for Bitcoin. Remember how we highlighted how it doesn't always point out the exact bottom? I mean, obviously this could have been the bottom, or we could be coming down for one more quick sweep before we do put in that bear market bottom. But nonetheless, that is all I see for the dollar and the two BTC pairs. So hope that was useful to some of you. Once again, none of this is financial advice, it's just my own opinion on the market. Cowboy out. Peace.